vrchive volcano is active again. 3 villages have been evacuated near San Vicente. 50 people suffered injuries when the quake erupted yesterday, or the volcano erupted yesterday, sending plumes of smoke, ash, and lava more than a mile into the air. And finally, singer Whitney Houston, caught with half an ounce of marijuana at the Kailua Kona Airport in Hawaii. Police said a security guard found the contraband when he asked her to open her bag. She walked away before police arrived. More business and financial news when Ahead of the Curve continues, including a roundtable discussion on international investing. 1999 returns from some overseas markets rival those of high-flying tech stocks. Is it too late to jump in on these red-hot investment opportunities? Or do the risks outweigh the rewards? Ed Allenson of State Street Global Advisors and Jorge Suarez of Athens Securities International share their international investment expertise. You are watching CNN-FM.
CNN-FM, the financial network. The King brothers, separated at birth. George King would wind up living with a family that subscribed to popular fishing magazines. James went to a family that subscribed to the Wall Street Journal. As the years passed and the boys grew, George spent most of his time in front of the television, watching fishing shows, while James read the journal like a sponge, absorbing ideas, insight, and getting a real sense of the opportunities surrounding him. 28 years later, George lives at home with his parents, while his brother James started a B2B web company, got mezzanine financing, and went public with a record first-day pop. Food for thought, especially since you can get 13 weeks of the Wall Street Journal for just 57 cents a day. That's 25% off the regular subscription. Subscribe now. Call 800-493-9900. That's 800-493-9900. The Wall Street Journal. Adventures in Capitalism. CNN-FM, the financial network.
Looking at a shot of Midtown Manhattan, sunrise here on this Monday holiday morning. Ahead of the Curve continues right here on CNN-FN. Our focus this morning on world markets and global investing. U.S. markets are closed today, of course, in observance of the Martin Luther King Jr. holiday. Good morning to you again. I'm John Defterios. Deb will join me at the bottom of this half hour. Here are the top stories we're following this morning on Ahead of the Curve. If you first don't succeed, they always say, try again. And that is a motto that applies to Glaxo Wellcome and SmithKline Beecham. The two companies have inked a $75 billion merger, which will create the world's largest drug maker. This after talks broke down 2 years ago. American Home Products is reportedly mulling a restructuring and a possible asset sale to improve shareholder value. That's according to the Financial Times this morning. And Sony says no comment to rumors Germany's Bertelsmann is looking to acquire its music division. Over the weekend, a German magazine reported Bertelsmann was eyeing either Sony or Britain's EMI. Let's take a look now. It's what is cooking post this giant merger between Glaxo and SmithKline, the name of the new company. Todd Benjamin standing by in London with market reaction and a lot more. Todd?
Well, basically, the market may need some drugs this morning in terms of prescriptions on this because they don't think it's a right prescription. The stocks are actually down this morning, John. Glaxo Wellcome's down 3.7%. SmithKline Beecham is down 7%. Basically, that means that SmithKline Beecham has given up all the gains it made Friday, and Glaxo has given up most of its gains. I think the reason, part of the reason the stock's down today, there's really nothing new in this deal to excite investors, and probably there was some momentum trading on Friday, and some of the arbitrageurs got in, and when they saw that there was nothing really new in this deal, they decided to sell the stock. Also, I got to tell you, analysts are divided on the merits of this deal. Now, one analyst said, hey, look, they're going to get cost savings out of this. The estimate is about $1.6 billion annually 3 years after the deal is completed. But that's about it. Now, another analyst I spoke to said, hey, I think this is a good deal. They had to go ahead because there's been a lot of consolidation since their talks to merge broke down 2 years ago. Also, the big thing is that they get a lot of mass, critical mass, in terms of research and development. And research and development is the lifeblood of these drugs companies. You know, you have to keep coming up with new drugs and have new drugs in the pipeline to keep the revenue and profit stream moving. And together they'll have an R&D budget of about $3.9 billion. But apparently, you know, Pfizer was raising the amount of money it was doing in R&D on a percentage basis faster than, let's say, GlaxoSmithKline. GlaxoSmithKline, of course, a few years ago had lost its exclusive patent on Zantac, the anti-ulcer drug, and therefore they really needed to make some sort of move, and SmithKline Beecham, which is right on their back doorstep, seemed like the logical choice. In terms of the deal itself, they'll have annual sales, combined annual sales of nearly $25 billion, and they'll have more than a 7% market share of the global drugs market. John, in terms of the overall markets today, not a lot of excitement going on. The FTSE in London is up 0.5%. The DAX is up about 0.5%. They had been flat earlier. Actually, the DAX had been down. Paris is up just slightly, and Zurich is down a touch. But with U.S. markets closed today, there's real no guidance for these markets, so they're just sort of treading water. And in terms of the currencies, the only real standout there is the Japanese yen. It's up more than 1 yen on the dollar as some long positions have been unwound. I want to tell you about a couple other stocks, because you did mention Bertelsmann, that Der Spiegel story saying that they had their eye on Sony Music or on EMI. EMI stock is up 2.7% this morning, and Sony was up 2.6% in the Tokyo market. But one analyst said, look, I don't think this deal would fly because of regulatory reasons, certainly between EMI and Bertelsmann. And the reason being, EMI's 40% of the music sales are here in Europe, half for Bertelsmann's music sales, and therefore they'd run probably into some competition issues. And on the other hand, Sony wants to remain independent. EMI isn't commenting on this speculation, but Sony, as you mentioned, had no comment as to Bertelsmann's intentions. In terms of other stocks in the news today, British Telecom is up 4%. John, of course, that trades in New York. Even though the markets are closed, the U.S. investors have a lot of interest in it. That stock is up sharply after some analyst upgrades. Alcatel, which also trades in the U.S., is down nearly 5%. Now, it fell amid rumors that told some analysts to sort of downgrade their earnings estimates for the fourth quarter, but Alcatel says it's comfortable with its numbers for 1999, so it's downplaying that story. Nevertheless, the stock is being marked down in Paris. In terms of other drug stocks being affected by this deal, most of the ones I've checked, such as AstraZeneca and a couple French stocks, they are actually lower this morning. So the sector not getting a big pop from this announcement today. Back to you in New York.
I find it interesting because the SMI in Zurich is so tightly tied to the drug sector overall that it's not moving higher. What is the impetus here? Because the valuations are already too high, or are we at the end of this merger cycle?
No, I don't think we're at the end of this merger cycle, but I think you're absolutely right. I think some people are thinking, hey, maybe the valuations are too high. It's always sort of buy on the rumor, sell on the deal, and I think that's what you're seeing today. Okay.
Thanks a lot, Todd, for the analysis there. Let's get you up to date in Asia. It was definitely not quiet there. Japanese financial markets closed at a 2.5-year high thanks to a strong broad-based rally there. The Nikkei finished up 480 points, more than 2.5%, 19,437. Hong Kong rose today 32 points, about 0.25%, but there's some concerns about a possible interest rate hike in the States, and we know the link between the Hong Kong dollar and the U.S. dollar. There's a peg there. Singapore lost 50 points, more than 2% today to 23.42. Taiwan, by the way, also at a 2.5-year high. Well, here's a question after that rally today. Again, is it time to go abroad for growth opportunities? Coming up, an investor's trip around the world with Ed Allenson of State Street Global Advisors. He's up in Boston. And Jorge Suarez of Affin Securities International. He's here in the studio. You see him right there in New York. International investment savvy. Next on Ahead of the Curve.
You already know the best actors, the best comedians, the best stunt people, and the best costume designers. Hey, maybe you should be a director. Desktop Movies, now premiering on an iMac near you. can be only one priority. At Morgan Stanley Dean Witter, we have never forgotten ours. Not surprisingly, we measure success a little differently.
Well, there's a world of investment opportunities out there, of course, literally. But with U.S. markets on fire, why invest anywhere else? This is a question that comes up constantly, in fact, here at FN from our callers. For one thing, diversifying overseas can shield you from a domestic risk. You can also participate in the growth of international economies, which can translate into huge gains in your portfolio. Witness the gains we saw last year and the recovery we saw, for example, in Asia. To take a closer look at this theme this morning, we've welcomed Ed Allison. He's a portfolio manager at State Street Global Advisors, coming to us from Boston. And here in New York, Jorge Suarez, president of AFN Securities International. And Jorge, I'd like to start with you because you've talked about this theme of investing in Latin America. And Latin America was quiet in terms of the U.S. radar, but it was not quiet in terms of performance last year. Starting in Latin America, do you think as a central place to put money right now, it's not too late to participate?
No, not at all. I think that if you look at valuations of American shares and the valuations in the local markets, I think that you still have a lot of room to converge towards valuations that you see here.
How long is the play in your view? I mean, do you take a 5 to 10-year horizon because of the restructuring that's taking place?
I think I definitely would, particularly in those stocks that have become global names and that will tend to trade accordingly in terms of valuation.
Okay, I'm going to pick up a number of different themes with you throughout the next 15 minutes. But Ed, I wanted to talk about a restructuring. You like Japan. The market's had a great run now, pushing up against 20,000 with this rally that we've seen overnight. And if you look at this, breaking it down into a multi-year process, how far along in the restructuring are we in Japan, would you say?
Well, just at the very early phase, because you know, basically we're moving towards a similar system that we have here in the U.S. where corporate managers create value for shareholders. And in Japan, that's a relatively novel concept. But I think the pressure is on, and a number of companies have begun that process, such as Nissan, who are laying off 20,000 people, or NTT, one of the largest companies in Japan and in the world, are also laying off 20,000 workers and restructuring. And so this process of creating shareholder value, of re-engineering the company, is at its early phases in Japan, which is one of the reasons I really like the market. In general, and in particular the companies that are leading this charge in restructuring.
I'll get to more companies in a second, but the other thing I've noticed has been a change in the last 6 months is the government now is quite willing to foster venture capital growth, and it's the seed capital coming into smaller companies, which seem to be turning the mentality around as well.
Yeah, a couple interesting things have happened. One, they're launching 2 new marketplaces. One is NASDAQ Japan. NASDAQ is opening up a branch in Japan, and they will I believe there are about 120 companies which will list on it this year, and a new market for really emerging growth companies called the mother market. So you know, instead of using the rigid rules that you had before with the Japanese marketplace, now you have 2 alternatives for those types of venture capital opportunities.
Okay, I want to take a step back here for both of you. I'm going to present this to Jorge first. The most compelling reason for an investor, I mean even the small individual investor, to put at least a quarter of a portfolio overseas right now, would you advise that?
I think I would. I think that what is very interesting here is that you already have the template of what happened in the United States in some of the sectors that are more dominant, like technology. And the same thing will happen abroad. So this is a good time where you can still play the same sectors at the earlier stages and with better valuation. So I think that's a very compelling argument.
Would you say the same breakdown, Ed, in terms of the overall portfolio, about a quarter?
We recommend 20%, but yes, right around there.
Okay. And in terms of the gains, year 2000, many people are looking at what we saw in Asia, which is a region you happen to like, and are hoping to match it in the year 2000. The expectations are high. A bit too high in your view?
I don't think so. I mean, if you look at Japan, the market 10 years ago was twice the level it is today, so we still have quite a long way to go just to get back to its previous high. And I think that, you know, that's a relatively long process, but I think we're going to get there.
One of the themes that came up when I chatted with, in fact, a woman who's 85, said she's played the telecom theme for the last 15 years, and it's paid off rather handsomely. Is there a central theme, Ed, that you're pointing to here when you look overseas, certain sectors that you particularly think stand out now?
Well, we are growth managers, and obviously the growth is being found in technology and telecom shares. deregulation in the telecom industry and new technologies such as wireless and wireless application protocol. That's a very exciting part of the world's growth opportunities, and we're playing there in Japan. It's part of this kind of new Japan theme versus the old Japan. Old Japan being, manufacturing, export-led economy. Now it's becoming more like the U.S. economy, which is, the service / digital economy, and those are the types of companies we're looking at, and telecoms are big part of that.
Okay, it's a big story in Latin America as well. Right now we're going to take a break. When we come back, I'll continue the discussion with Ed Allenson of State Street Global Advisors and Jorge Suarez of Afin Securities right after this short break.
Is the municipal bond market appropriate to your risk level?
It is decidedly so.
What about emerging market funds?
Signs point to yes.
What PE range are you looking for in securities?
Ask again later.
Excuse me?
My sources say no.
Stop guessing. Come to the new H&R Block Financial Centers, where we speak your language.
We can help you see things from every angle, because the fresher the thinking, the fresher the cheese. Ernst & Young, from thought to finish.
Can a computer think? Can it learn? Can software be developed that acts exactly like the human brain? For 50 years, that's been the question. Today, Nugents are the answer. Using a patented breakthrough in neural network technology, Computer Associates has created the first software that can think. Imagine what this new software can do for your business. Nugents, software that can think.
We started out a pretty small business, but it sure wasn't small to us. We needed help, financial help. That's just what we got from the people at American Express Small Business Services. We got equipment financing for bigger stoves and faster computers, a line of credit to keep our cash flow flowing, plus the buying power to help our business grow. 1-800-SUCCESS was the best call we ever made. Like my father says, you can do anything you set your mind to, but you can't do it alone. He's right.
See London and Frankfurt picking up some steam here in the last 15 minutes after that giant drug merger, although the big rally in those drug stocks came on Friday. Today we're looking overseas, in fact, for investment opportunities. My guests are Ed Allenson, portfolio manager at State Street Global Advisors. You see him up in Boston. And here in the studio with me is Jorge Suarez, president of Afin Securities International. And I wanted to jump into some sectors here and start with Jorge about telecoms, because that's what Ed Allenson was talking about in terms of Asia. Ed Allenson owns Telefonica. You've looked at Telefonica in this giant transaction in Latin America. This is the Spanish giant, which has put in great ties into Latin America. But there's a downside here after this major transaction on Friday in a number of different countries with its holdings now. It seems to have set a floor and a ceiling for these stocks. Why is that?
I think that in some way the biggest theme last year for Latin America was that as a region it was put back on the radar of global investors. And in order to do that, market caps and market weighing within the indexes is very important. So when you have what is the top trading stock in many of the local markets leave in order to be substituted for a European play that is going to be traded in Europe, that is bad news for Latin America.
The other theme here is that you say there's a battle for capital dollars here with Taiwan and Malaysia starting to capture some of that money moving into the telecom and high-tech arena.
Yeah, as John said, I think that technology is the key play for the year, even for emerging markets. And Asia has been traditionally a market that is much better at doing that, and that technology plays a more important part in its domestic markets. So now that we have Malaysia and Taiwan gaining in its participation in global benchmarks, it is going to be very hard for Latin America to compete when the markets in Latin America are shrinking. So yes, for the battle for money, it's going to be a very important theme.
It's an interesting point. Ed, you own Telefonica. What do you think now after this big play in Latin America? It also has very big holdings and joint ventures in Europe as well.
Sure. I mean, it's definitely a globally dominant telephone company, and by buying in their subsidiaries in Latin America, that just raises their level of competition in Europe, and that puts them on the map as one of the biggest players. I think it's a very interesting company. I think that the way we look at the world is we look for globally dominant players, and I think, as Jorge just said, there are fewer of those in emerging markets. And now that you see kind of the consolidation, like Telefonica buying out its subsidiaries, there are even fewer names.
In fact, Todd Benjamin is bringing up the fact that Glaxo and SmithKline both trade on Wall Street as ADRs. And what we're seeing here is global dominant brand names emerging. I wanted to get into some company names here. First, you, Ed, about some of the major players that U.S. investors can buy as ADRs that you think are going to be around for the next 20 or 30 years that you want to buy now.
Well, I mean, Telefonica is one of them. Their subsidiary, which is the internet assets that they've packaged together, called Terra Networks, which will be the dominant player in both the ISP and portal space for Latin-speaking people around the world. It's targeting a population of 550 million Spanish and Portuguese speakers. So I think that's an interesting company. Kind of the grandfather of the internet in Japan, a company called Internet Initiative of Japan, and that also trades on NASDAQ. It's IIJ is the symbol. Those types of technology companies will be globally dominant going forward.
But Jorge, do you want to pick up on the theme here in terms of companies that, in particular, Latin America, that you like, that are going to emerge not just as regional players, but start branching out in other parts of the world?
Yes, I think that I would definitely choose Televisa, which I think
had
that
a great run, haven't they?
It
strategies played out.
And when you see what happened last week here in the United States with Time Warner and with AOL, and you realize the value that content has for this place, Televisa has amazing content in Spanish, and although it is by far a smaller market than the market in English, it's still the second largest. So it is going to be very important to see how they use their content. And I think here what is very different is that, as in the United States, traditional media players have not been very good at entering into the new technology. I think that the Latin American companies are learning from this and might be very strong players. So actually Televisa announced the launching of their new portal in the second half of this year, which is going to be, I think, very important.
Other internet plays at Teléfonos de Mexico.
Absolutely. I think Teléfonos is doing everything right in terms of being a dominant player in this market. And I think it also, I think here that we're seeing basically a world that is globalizing, and where a few names, as Ed was saying, there's very few names, but those names, if they converge in terms of valuation towards their American and European counterparts, I think we have a lot of room for growth.
Ed, I remember when they signed that WTO agreement, the outlines of it for the U.S. and China, China.com went through the ceiling. We also have Hong Kong Telecom and China Telecom. Do these fit into your basket right now? Do you like them?
Well, China Telecom really is a globally, dominant type of company in that it is the largest player in the cellular business in China, and obviously the growth rate there is spectacular. Ericsson and the other providers of telecom equipment are doing a good portion of their sales in China, which just tells you about the growth there. So very positive on that. Hong Kong Telecom, terribly competitive domestic marketplace. Limited marketplace, and it's limited to the 6 or so million people in Hong Kong. We're not very positive on that at all. And the China.com, well, there are a lot of different portals and ISPs in China right now. China.com is not the largest one by any stretch, and a number of the bigger ones are actually going to be listed this year. So I think I might be more interested in some of those companies, despite the fact that China.com has had a spectacular run. It was the only way in up till now.
You did whet our appetite. What are you looking for in terms of portals for China that we should watch as investors when they come around?
Well, there's a whole slew of them, and the same is true in Japan. You'll be seeing a lot of different names coming out. I think this is kind of the make or break year for internet companies around the world, and one of the things we've been doing is, although it's very difficult to choose the long-term winners, we feel that it's important to have some exposure there because like in the U.S., these companies ended up being a big part of the marketplace.
Okay, I want to wrap it up. We have about 30 seconds, 15 for you, Jorge, in terms of an external shock that could throw these markets off. We went through this huge restructuring in the last couple of years. Are you watching for anything right now? Is it a shock?
Well, I think without any doubt the biggest potential shock would be the United States itself. If we see what really differentiated, for instance, Mexico from the rest of Latin America was exports to the United States. Consumer confidence in the United States has become a gigantic subject for Latin American countries, and particularly for Mexico because of NAFTA. So if consumption slows down in the United States, it will have a very meaningful effect. For Mexico in particular, being a political year, that could be negative. And in Brazil, it could really slow down the trend. Let's not forget here that Brazil has a huge current account deficit. In order to finance it, they need United States doing well.
Okay. Ed, how about you?
Well, I think the U.S. is obviously a concern for global investors. What I would say is that the U.S. economy is at a much more advanced stage of its growth, whereas Europe, you're just coming out of a recession, and obviously in Asia, you're coming out of a recession. So I think that in relative terms, you're going to be much better placed to have some of your assets overseas because, again, they're moving into their growth phase. The U.S. is now coming towards the end of its growth phase.
At least we think so, right?
Well, exactly. We've been thinking that for the last couple of years, but it is the longest expansion in history.
Yeah, it's amazing. Nice to see you, Ed.
Good seeing you, John.
Yeah. Ed Allenson of State Street Global Advisors up in Boston. Jorge, it's always a pleasure to have you in the studio.
Thank you very much.
Jorge Suarez of AFIN International. We're going to take a short break. We'll wrap up ahead of the curve on this holiday Monday morning with a look at this morning's papers.